First time home buyers Q&A session. So tonight we are going to answer any questions you have if you are looking to purchase a home. Sorry about that. If you're in the market to buy, we're going to answer any questions you have. If you're listening and you have questions pertaining to home ownership, drop them in the chat. If you're watching the replay, you definitely want to make sure you drop them in the comments so I can answer any questions you may have to home ownership. We are approaching, we are the end of the month. And ironically, this is the fourth quarter of the year. So we have, approximately about 90 some days left in the year. Still time to purchase a home. And based off of current market trends, we're currently seeing home prices stay where they are. And we're also currently seeing where we have seen interest rates drop. Now, we've been talking and there's been a lot of the Federal Reserve drop interest rates. Interest rates have stayed about the same since the Federal Reserves have dropped the interest rates. So if you are looking to purchase a home, now is a great time, because even though interest rates have dropped some and interest rates have dropped some, prices have remained the same. There are some cuts, price cuts in different parts of the country. You still have a great opportunity to negotiate with the seller on their home prices. Congratulations, Derek, on closing on your new home. Hopefully, you guys weren't affected by the storm. I think you guys receive winds and rain through the storm. So I'm glad that everybody who's out here is nice and safe. And I think they're talking about a small storm coming through sometime this week. But again, as first time home buyers, the journey can be scary. You have a ton of questions that you want to get answered, and you want to make sure that you make the right decision in selecting your team. When I say your team, in selecting who your real estate professional is going to be, your real estate agent, selecting who your lender is going to be, your home inspector. Your home inspector is a part of your team, and the attorney's office, the title company, who make sure that there's no liens or judgments or anything on the property that could hinder you from purchasing the home. Judgments, liens, encumbrances, not having right of ways and easements and things as such. Hey guys, I do have a quick question for you. How does my sound? The last two lives I've done, my sound has not been great. I've took about an hour to test out my sound before now. Give me a thumbs up or say it's okay, because I can't hear myself. I only know what what I practiced speaking earlier to see if my sound was any good. Let me know how my sound quality is, if you could. And Derek, if you can, man, sounds clear. Don't sound muffled, because the last couple of times I sounded muffled. All right, cool. Great sound. So we're in, tomorrow starts the fourth quarter of 2024. There's still a great time and an opportunity to purchase a home. You still have a chance to get into your home before Christmas. You have a chance to get in, depending on where you are, you could potentially have a chance to get into your home before Thanksgiving. I want to be able to help those who are seriously looking to purchase a home. I've done a lot of consultations in the last couple of weeks, and some people are preparing for 2025, and that's fine. That's okay. Time your lease out. Make sure you get yourself a game plan on what you need moving forward. Make sure you have enough money saved. Make sure you have enough money saved to do what you want to do, because buying a house is not only um, it's not just getting the house, it's being able to keep the house. You want to make sure you're in a position to be able to hold on to your home after you make that purchase, right? Now, something that somewhat of a concern, right? So, no, you don't want to be house poor, but you also don't have to furnish the entire house with all new appliances, all new furniture, wardrobes, mirrors, TVs. You don't have to do all that at one time. So I've had conversations with people who want to make sure they have money left over so they can furnish the house, which makes sense. But sometimes you can take your older stuff that you have, put it into your house, save up some money, and move things in or buy things as you go along, because you're not in the house for a short period of time. You're going to be in that house hopefully for the next 5 to 7 years, right? So you don't have to get everything all at one time. And I think that's something that people get misconstrued, meaning also you don't want to go into debt trying to furnish your home as well. Okay, maybe you don't want to take your old furniture into your new home. Maybe just get living room furniture. Take what you have, your current furniture, and maybe put it in the family room. You don't have to have a new kitchen table. Your beds are fine if they're okay with you moving, with you sleeping on them now. What's a little bit longer? Like realistically, once you buy your house, who really goes in your bedroom? Typically, your company doesn't go any further than your living room or maybe bathrooms, right? Or your backyard. So take those things into consideration. Yes, you're buying a new home, whether it's brand spanking new or a resale, but you don't want to spend all of your funds on getting to the home and then you don't have any reserves. So, just take it from me, maybe you per pay period or maybe per quarter, you just say, okay, this quarter I'm going to furnish the living room. Next quarter I'm going to take care of the kitchen. Next quarter I'm going to take care of the dining room. When I get my income tax check back, I'll take care of the bedrooms. Just take your time when you move into your home and when you become a homeowner, and don't go into a lot of debt. The other thing I would urge you to do is to give yourself maybe 6 months to a year, right? 6 months to a year before you buy a new car, because purchasing a home is the largest purchase you're going to make, right? However, you're typically not used to, making a large monthly mortgage payment. And if something goes wrong, if you're currently a renter, you're typically not used to, having to make repairs on your own. So, 6 months to a year allows for you to see how it goes paying your current mortgage, and then to be able to budget and see how much money you can save over time to help you along the way. Because you don't want to be house poor moving to the house. Let me see. Chanel has a question. Let's get right into it. How long does it typically take for your mortgage score to improve? My FICO has increased, but not the mortgage score. That's a great question. To be perfectly honest with you, I have no clue. I don't know how long it will take for your mortgage score to increase. Let me rephrase that. Without me actually doing some sort of simulator, I don't know what or how your mortgage, how fast or how long it'll take for your mortgage score to increase. What I do know is that you want to keep your debts down. You want to make sure you pay off any type of medical collections and do something called pay for deletion, where you pay that actual bill and you get it deleted off your credit. You also want to make sure that keep your balances low on your credit cards. And as a rule of thumb, you want to have, you want to keep your balances low over the course of time. meaning, there's people who pay their credit, they use it and they pay their credit card off every month as they go along. And that's cool. You pay it on time, you pay it down to zero balance. But in order to get the most scoring, optimal scoring, you want to make sure you keep a low balance over a specific period of time. So it's not just 1 month of having a low balance, it is consecutive months of having low balances. So you want to make sure that you keep your debts low. You also want to have a good mix of credit. Doesn't have to be high limits, but a limit on a credit card, which is called revolving credit, as well as having a limit on a installment loan, and showing that you can pay installment loans over the course of time. So doing those type of things helps with your score. Chanel, the only way I would know your mortgage score increasing is for us to run it through the simulator, and then the score that we get will be a FICO, and it tells us or forecasts us how long it takes for it to increase. If you're seeing an increase in your actual credit score by doing things that you were told, or just doing things to help improve your score over time, it's going to increase. But the best thing I would probably do is say, hey, apply, run it through the simulator and see. And I'm not sure, I don't know a whole lot about my FICO, but I would go on my FICO and see if it has an actual simulator that can help you simulate what your score would be if you've done a few different things to try to improve your scores. Hopefully that helped. I will get together with my realtor the middle of October. I will do the pre-approval afterwards. Can I get the information from you? Yes, ma'am. Yes, you can. I like before people actually apply, I like for them to schedule a consultation with me for a couple reasons, right? One reason why is because I want them to I want to have a conversation with you, so I know when I pull your application and pull your credit, what it is exactly we're looking at. Are you a veteran? Are you retired? Do you work? Are you self-employed? That will allow for me to send you the documentation that I need from you to qualify you. And then, are you looking for down payment assistance? Do you have money that you can use? Are you have money that you can use, or you'd like to see if you qualify for down payment assistance? Are you moving in from somewhere else? Like, all of those are questions that I ask to make sure that, I'm working you up fine, the right way. Do me a favor and schedule a call with me, and we can go over those things. And then I will send you out a list of documents in my online application to apply, and then we can go from there. I will get you my information in a few seconds. I'm working on this on my own tonight. My behind the scenes team is not available, so I am doing a 2-man game. So I'll get it to you in a second. I've been doing what you told me for our game plan. Hopefully we can move in our information, get our information running again at the beginning of 2025. Yeah, that's cool. Yeah, that's fine. Yeah, just keep working on it. It takes time. Sometimes for different people it's instant. Sometimes it takes a while for you to see results. It just all depends on what's on your credit, or what you've done and have not done. So yeah, continue to work on that game plan, and let's circle back the beginning of the year to see where we are and help you and your husband, move into home ownership. So, guys, we're talking about first-time home buyers. We're answering any question first-time home buyers have pertaining to purchasing homes. The other thing is we're also making sure that you're prepared to get the home, and we want to make sure you're prepared to keep the home. So I gave, if you're watching the replay, I gave some tips on how to, space out spending all of your money, spending all your capital that you have getting into the home and furnishing the home. I also gave you some tips, on, potentially increasing your credit score how you can get in position to purchase. Like tonight, it's end of the year. I mean, end of the month. I'm sorry, end of the quarter, and we're going into a fourth quarter, and just looking to help as many people as possible get into home ownership, answering as many questions as possible to help people, get over their nerves of applying for a mortgage and going through this process. So I've had conversations with first time home buyers. I've been blessed to get feedback, have successful scenarios on home buyers, and also I talked to an agent today. It wasn't my deal, and she had a buyer that walked away on Friday, and that was closing day. So you're not done until you get to the finish line and have signed off on all your paperwork. And it's it's not easy. I know there's a lot of TikTok videos and Instagram videos and YouTube videos and people popping champagne, popping balloons, popping confetti and celebrating, talking about how easy and smooth and painless the process is. But sometimes it's arduous. It's a very tedious process. And, depending on how you bank, how you keep paperwork, or how you're set up is going to determine the level of difficulty getting through the process. Like, I never want to portray that this is easy and simple, but it's worth it. Yeah, that's what I always want to let you know. It's definitely worth it, but it's not going to be simple. It's not going to be easy. There's going to be times where you're going to want to give up, but you've come too far to give up. And I just also want to make sure I encourage people to start the process. If you're listening to me, or you've been listening to me over a specific period of time, or if you've been listening to somebody, one of my favorite realtors, Shahida Hill, or Natasha Bazil, like, if you've been listening to us or them over a course of time, we're giving you information to help kind of make the process a little smoother. We're giving you information to help you prepare. Everybody's situation is different, but we're giving you information to kind of put you in the right spots. Biggest things is documents. I talk about it probably every video, and I think it's the most important piece of the process is having your documentation and your documents. A couple of things that I've run into recently that, if you're listening, you could be in this situation, is making sure you have any kind of income that you're going to use, that you have documentation for. If you have foster kids, have adopted kids, child support, alimony, you receive money for guardianship over one of your kids or a parent that you want to use, and it comes to you as the guardian or the guarantee, or the person receiving the funds, then have all of that documentation available, so that we can use it in the pre-approval process. That makes it simpler. Just gathering your documents now, even though you're at the beginning stages of the process, just start gathering your documents. I've had buyers who did not know how to get into their ADP system or into their pay system where they can get their pay stubs. And no, we can't just use the deposits that we see in your bank account unless it's a bank statement loan, and that's for business owners, right? Making sure you have access to your W-2s. If you don't know where they are, reach out to your tax preparer and see if he or she has them, or reach out to your employer to see how you can get an additional copy of your W-2s. Your actual tax returns, reaching out to your tax preparer to see if he or she can give you a copy of your tax returns, federal only, if you're self-employed, or if you're trying to use some type of down payment assistance program, which requires tax returns. When it's your birthday, do something simple. Take a look at your driver's license and see if your driver's license run out that year, if they're expired. If they're expired, get you a new set of driver's license, because we need an unexpired driver's license. If you don't know how to use your bank, access your bank statements, or you get them in the mail and you rip them up and tear them up and throw them in the trash, you want to begin to save those things or get online banking, because we're going to ask for your bank statements. The two most recent bank statements, all pages, even if it's blank. If you don't have online banking set up, potentially get online banking, have the banker show you how you can log in, or have someone that's a little bit more technical savvy help you log in and show you how to save your bank statements as a PDF. So when you apply for the mortgage, you can either email them over to me and my team or whoever your lender is, or download them to your computer and then upload them to the portal. Those are things that, doesn't sound like, oh, it's that big of a deal. But when you're in crunch time or you need to learn how to do it, if you have that skill already done in advance, it makes the process a little bit more smoother, a little bit more faster, and you're a little bit less frustrated because now you know how to do those things. If you are not computer savvy and you're watching it from your phone, 9 times out of 10, I'm going to advise you to apply online on a computer, because it makes the process a little simpler and you get to see all your questions out. Certain things you can do using your cell phone, but you want to make sure that you are able to answer all the questions as effective as possible. And we have another question. Hey, Janet, how are you? Los Angeles. I have a question. If I've never bought a property before, I want to buy a property out of state so I can relocate. Can I buy a property as a first-time home buyer? The answer to that question is yes. If you've never purchased a home and you're looking to relocate to a different state, you can purchase as a first-time home buyer. In most states, if you have not had owner interest in a property in the last 3 years, you're considered a first-time home buyer. If you're looking to purchase a property from out of state, so if you're moving from California and you want to move to, let's say, Texas, you need to have a job, either be able to work remotely, or you have to have a job in place so we can utilize that income to help you qualify. But you don't have to already be in that state to be considered a first-time home buyer. Janet, hopefully that answers your question. And I want to expound on what she said. So if you're preparing to relocate from one state to another, you want to make sure that you have, like I just mentioned, you have the ability to work remotely, or you have the ability to be within distance. So example, you let's use South and North Carolina. There's parts of Charlotte that's right next to South Carolina, within the stone's throw. If you work in South Carolina but you want to live in Charlotte, and it makes sense, let's say 30 minutes, an hour commute, that makes sense. That's not going to be a problem if you're relocating from one state to the other, right? If you're relocating from California to Georgia, then yes, then you want to be able to work remotely, or you have to have a position in Georgia, or where you're moving to be able to work. So if that makes sense, right? So we can't utilize the income if you're doing a primary residence and you're going to move into property. We can't use your income from your current position if you're not going to be working that job or working at that company when you're living in the home. So hopefully that makes sense. If you also are moving from one state to the other, you want to make sure you time it out. You want to make sure you have an offer letter when you are looking to move, or you have some idea of how much you're going to be getting paid. Because if like a lot of people who move from larger states or higher paying states to Georgia, they, like for instance New York, they find out that the income or pay in New York is totally different than what we pay in Georgia. And, now they're not having success finding a job that pays as much as they need to live, or that they're used to making. So, make sure you have a game plan in place. And if you're if you're looking to relocate from Georgia, from another state, one state to another, reach out to me and let's discuss it and kind of get you prepared so you have some action items to handle or work through, so it doesn't delay your move. So hopefully that answers your question, Janet. Let's kind of reset the room. We're talking about first-time home buyers. We're answering questions for first-time home buyers. We're answering questions to help people get prepared for home ownership. We kind of discussed things that are going on in the market. We've also, discussed tips on, looking at your credit, preparing, kind of repairing your credit, doing things to get your credit situated. We've, discussed, market conditions. We've talked about, housing prices. We're talking about you still have the ability to purchase a home, now and be able to get into it by Thanksgiving or Christmas. Thanksgiving, you gotta be pushing. I'm not gonna make no qualms about it. You have to be definitely pushing and moving forward, and not really any time to delay, right? If you're looking to be in your house by Christmas, you have a great opportunity to get into your home Christmas. And so typically, after what I've seen, after Labor Day, the market somewhat seems to slow down sometimes. However, that doesn't mean it's not a good time to buy. While everybody is in holiday mode, I, as a buyer, would still be out looking because I'm going to have even less competition because people are in holiday mode or worried about the presidential election or wanting to get, things situated for Halloween or Thanksgiving, whatever it be. You want to make sure that if you're looking to move, I would go when it's less competition, for sure. And even if it is high competition, I would still always look. So I said that to say, I would never stop looking for a house. I don't think there's a time to start and stop. I think that you just continue to look, because what most people don't understand is there may be 4,988 houses on the market today. And then all of a sudden there could be 5,000 houses on the market because sellers have put markets on the home. Homes come on the market every day. You don't know when it's coming. Sometimes you see when it's coming soon. It could be on a Saturday that it gets listed. It could be a Monday. So 7 days a week, you see different homes being purchased. And then 7 days a week, you see homes going on and off the market where the seller decides not to sell. The house may have gotten sold. It may have went under contract. Like, all of those things occur. So, searching for a home is a daily, everyday process because there's always something coming on the market on a daily basis. How you doing, Miss Smith? If you get approved at a less than desirable rate, how long should you wait before you refinance after you close? So you cannot refinance until you've owned the home for 210 days. 210 days, you're able to refinance. And then even at that point, it still has to make sense to refinance. So, if you've purchased in the last 2 years, you're probably able to refinance unless you took a builder's deal where they offered a good interest rate, or even if you did a 2-1 buy down, right? And your rate is, let's say right now your rate is 5%. But when it goes up in the next year or two, your rate goes to 7%. I would still look to refinance now, because the money that was not spent for the 2-1 buy down can help you buy down your principal. Then you say whatever amount of months. So let's say it's been 7 months. You saved money over the course of that 7 months, in paying your mortgage. And then when you refinance and you get the lower rate, you're going to be making a lower payment than you would have if you waited until the 2 years was up. But in order to refinance on a home, if you do FHA, VA, USDA, or conventional financing, you have to wait 210 days from owning the home. And during the course of that 210 days, you cannot have any late payments. So it has to be 210 days and no late payments. If you've had it longer than that, they look at no late payments within a 12-month period of time. So hopefully that helps. How you doing, Blair? Looks like the Florida crew is joining tonight. In my market, there are several houses in my price range that are listed as cash only. Is it ever advisable to approach the seller to see if they're interested in selling to someone with FHA? Yes. So let me ask you a question, Blair. Is the property listed for sale by owner, or is it listed by a realtor? And I'll tell you why I'm asking you the difference. So while she's answering, one reason why it would be a difference is it's listed by a realtor. Okay. Some sellers think they're going to get a sale quicker or close faster utilizing cash, while that could potentially be the case. Once it's under contract, the fact that someone has cash doesn't mean you're going to have a buyer any faster. So if Blair's out there and she sees a house in 123 Main Street and it's cash only and she's pre-approved, and then let's say there's me who's looking at the house, but I don't have my cash yet because I'm waiting for a sale, or I'm waiting for a settlement, or I'm waiting for a lump sum of money, then that doesn't mean that I'm a better buyer because I have cash. What if my money don't come for 6 months? Then you'll miss out on Blair, because I'm pretty sure in that time frame she will have purchased another home and you're still sitting and waiting. And then if that person money never comes, or your situation changed, you're waiting for cash. So I would potentially make an offer and just let them tell you, hey, we're not going to accept any FHA financing. And part of it is miseducation. On the buyer side. So when I asked you if it was for sale by owner or listed with a realtor, sometimes sellers don't understand the financing process because they don't do it on an everyday basis, right? And they think, oh, I'm gonna get a buyer faster if I do cash only because they'll give me what I want. It's gonna be less headache. Not always true. When it's listed with an agent, sometimes they list it because the seller says they only want cash. So the agent, to appease the seller, who's their client or customer, they use, they do what they ask them. But I think that having your agent approach them and make an offer, all they can do is tell you no, that we need cash. So I would not put in an offer because it says cash only. Now let me kind of play devil's advocate. If the property needs a ton of work and it's not going to pass FHA financing, that's a different story. But if it doesn't need a ton of work and they're just asking for cash, then I would put in an offer and see what they say. Put in a strong offer, but definitely see what they say. So those would be my suggestions. But I put in an offer. I don't care if it was cash or Bitcoin. I would ask, will you take FHA financing? And if not, why not? So Oh, hey guys. So, we are discussing first-time home buyers. We're answering questions for first-time home buyers. It seems like we have some first-time home buyers who are in the group and they're looking to see when they can refinance. And if you are in that situation and you're looking to refinance, definitely let's discuss it. Again, we recapped and talked about how, we've talked about some things about credit, some things about making strong offers, or making offers in general, different things you need to do for financing. Some of the most important pieces of the financing aspect is, having your documentation, having it prepared. not procrastinating and waiting till the last minute to get your documents, and then you get frustrated in the process. If you're preparing now, if you're preparing in 6 months to a year, I would start gathering documents, educating myself on how to get my documents, whether it is getting your pay stubs, bank statements, tax returns, W-2s. Make sure you check your driver's license to make sure they're not expired, because we'll need an unexpired driver's license. If you don't have driver's license, make sure your work visa, if you're on here on a green card or work visa, make sure they're not expired. Make sure you have access to either your social security card or your passport. Just be prepared in the process. Also, something I want to educate you guys on is most lenders do not start the pre-approval process until they have all of your documents. The reason why they do that is because they don't have, it doesn't make sense for them to continue to go back and forth in and out of your file if they don't have all the information they need that they can use at one shot. Now, kind of preference that. If you provide all the documentation that I've requested or your lenders requested, and they need initial documents that neither one of us knew, that's a different story, right? But if you give us bank statements one day, tax returns the next, W-2 the next, and then pay stubs on Thursday, and then ask, hey, how's my pre-approval? They haven't finished it yet because they have not had all the information. And pre-approving a buyer takes knowledge and it takes time. It's, even though we're in a high technology environment and we've got all these AI things, it's actually not as simple as pushing a button. The system is only as good as the data we provided, right? And you want to make sure that your lender and that you're giving your lender accurate data so he or she can give you a strong, pre-approval so you can move forward and become a homeowner. I think this is a great time for my promotion of my Facebook group. See, I have a Facebook group that we post in like 5 times a week, and we want to build a community of first-time home buyers. And if you are a first-time home buyer or you've already purchased, get in the group. Yeah, it's not just for first-time home buyers, but it's a community feel, because I'll talk about when's a good time to refinance, when, if interest rates are going down, what if you want to do a home equity line of credit, when's a good time to purchase an investment property, how can I purchase an investment property. The link will be below for our Facebook group. There's 3 questions that you need to answer getting into the Facebook group, because we want to make sure that we're inviting people who would like contribution from us in terms of us helping them in the process. And we want to make sure that we're not inviting any scammers or spammers in the group. I've had to kick out one person out of the group because they were trying to send information that wasn't approved by me, nor did they run it by me. So I want to make sure that I keep my group wholesome. I much rather have 1,000 strong followers and community than 10,000 people who are rogue and have no unison. The next thing is we have a newsletter. Our newsletter goes out twice a week. Sometimes it's 3 times a week. It's usually pertaining to something in terms of our video that we've put out, or if we're going live, or if we went live. It's educational. It'll help you along the process. If you miss something and you don't get the notification from YouTube, or, notification from Facebook saying that Kevin's going live or he's going live at this time, you can get a chance to read your newsletter at your leisure. And it'll just kind of help you with knowing what I put out in terms of going live as videos, or just putting out videos in general. If you're new to the channel, hit the subscribe button so you can get notified. And if you are not new to the channel and you're enjoying, the information we're getting tonight, give us a thumbs up. It definitely helps push things out into the YouTube algorithm. So, we have we got a decent sized group of people that are watching. If you're out there and you have questions pertaining to home ownership, even if you're not a first-time home buyer, drop it in the comments and ask your question. There's no stupid question. And if I don't know the answer um, to your question, I'll let you know, but I'll try to get you the answer. When lenders provide an estimated mortgage payment, do they include the actual home insurance prices, or do they estimate the home insurance numbers that included in the estimated mortgage? It's typically an estimate because they don't really know what the homeowner's insurance is going to be. Um, know what the homeowner's insurance is going to be for that property. Each property is different. They could be the same price. They could be the same price. They could be in the same city or town, and same square footage and everything, but those prices on the homeowner's insurance could be totally different. So they're estimating. Me, I try to estimate on the high side, just so we don't know what the insurance is going to be. What I've been running into is homeowners insurance has increased as much as 50-60% in some places, and for some people. If what you want to make sure is, if you currently have home insurance, if you're a home buyer, try not to get any claims on your homeowner's insurance. Same thing if you have renter's insurance. From my understanding, that helps you with having established insurance, and you want to make sure you don't file any claims on that as well. If you do have something that you have questions about in terms of filing claims, it's been to my experience, instead of calling the 800 number, I would call my homeowner's insurance representative directly at their office, because when you call those 800 numbers, it gets logged in as a claim if you even mention anything. So, if, Jake from State Farm is your homeowner's insurance agent and he has a number, I would give Jake a call and advise him on what you're looking to do. And then he can advise you on how you should proceed and if it's worth it. Hi, I'm from the Palmetto State. This may have been answered, but during your consultation, do you provide a plan of action and game plan? Yes, I do. I do provide plans of action and game plans. Um, so when someone calls me, it's 2 or 3 step process. First step is booking a call with me. My information will be below, so you can book a call with me. We'll discuss what it is you're looking to do versus what you could potentially can do. From that point, we will then get on. I will send you a link to my online application and get a list of documents from you so we can see if you qualify. If you qualify now, that's great. Sometimes people want to qualify for more. So then we give them a game plan on what you potentially need to do and strategize to qualify for more. If you want to use less money, and say you pre-approved for $500,000, but you don't want a $500,000 a month mortgage payment, then you can always buy down. Let's say you don't qualify at all. Then we put together a game plan on what it takes for you to qualify, for a mortgage. Sometimes that's more income. Sometimes that's paying down on debt. Sometimes that looks like a combination of paying down on debt and figuring out how to get more income. And it also, credit. Sometimes you may have the income, you may have low debt, but you don't have much money saved. Then we look at that. So we take a look at the grand scheme of things, and I do provide a game plan. I'll tell you if it's above my pay grade, meaning if it's if it's a credit situation that's outside of my knowledge, then I can refer you to someone who does credit repair. Not a fly by night. They don't do we'll have your credit swept in 45 days. They look at a plan of action, and then sometimes they're not able to help you and they'll let you know. But yeah, we do give game plans. All lenders do not give game plans. But I do try to give some sort of game plan and action items. That's a great question. Again, guys, if you have any additional questions, let me know. Definitely let me know if you have questions pertaining to home ownership. Let me know if you have questions pertaining to refinancing. Even if you're if you're a homeowner, no problem. Even if you're a homeowner and the next step is to buy an investment property and you have questions about purchasing investment properties, let me know. By a show of hands, or if you're watching this replay live, who's looking to purchase a home in the next 6 months? So if you're looking to purchase a home in the next 6 months, throw a 6 in the chat. If you're looking to purchase a home in the next 12 months, give me a 12. Throw a 12 in the chat. If you don't know when you're looking to purchase a home and you've heard people talk about how great it is to purchase a home, then, give me a 100 in the chat. I like to kind of see where people are in their process. And then another thing, what are your feelings pertaining to the elections? Is your 6 months window of time because you're waiting to see what happens during the election? Or is your 6 to 12 month period of time because you need time to prepare? I like to know that as well. I think that's a good gauge of how things are going to go in the market, in terms of people's ability, whether the fourth quarter is going to be strong or it's going to be weak because it's an election year and they're looking to see who is in the process. I mean, who becomes president, not in the process, to see who is the president. Okay. Need time to prepare. 6 to 12 months. 6. Miss Alva said me. I understand what you mean. Very limited inventory in my area. Lease is up in April. Okay. Lauren. What I would say is lease up in February. Okay. So if your lease is up in February, you probably need to prepare now. Or you're either going to have to sign a 6-month lease or go month to month. And I'll break it down for you why I say that. We're in October right now. Let's say you call to get your pre-approval November, right? October, November. Then by December, you have to let your landlord know whether you're going to stay or go. That's your 60-day notice. If you find a house, if you're pre-approved in November, you find a house in December and you close in January, you close in January, your first payment isn't due until March. So you have February to move out, right? And you're not paying a mortgage and rent payment at the same time, right? So if your lease is up in February, I would schedule a call ASAP. So it can kind of give you a game plan. And if after the game plan, if you're not prepared or you find out, hey, I'm not ready for a home yet, I would reach out to my landlord and ask them, what does it look like for me going an additional or going month to month until I'm ready? So Alva says they're going up on my rent an additional $260 per month in January. Yeah, I understand. When you go month to month, typically people pay extra. So the mortgage payment goes up if you decide to go on a month to month basis. And let's say you need an additional 3 months and your rent goes up an additional $200. Do you want to pay an additional $200 on top of the $1,200 you were paying? Not necessarily, right? However, when you look at the grand scheme of things, it's less expensive to go month to month and only need 3 months and pay an additional $600 total than paying $1,400 a month over the course of 12 months. So yes, you want to kind of mitigate your cost, and no, you don't want to pay the extra. But if you only have to do it for 3 months, to me, it's worth it. I think it's worth paying the extra $200 a month, if that's what the number is, to go month to month, so you don't have to be locked into a 12-month lease. And let's say it goes 4 months, then you still, you pay an extra $800 versus paying a year's worth. And by waiting a year, you run the risk of interest rates going up and housing prices going up. So those are two things that you run into if you try to wait, or re-sign for a year to prepare yourself. I would see how long you can go month to month and not lock yourself in. Okay, that's month to month, Miss Alva. Okay, that's cool. How many people, and I know this may sound like a weird question, how many people in this group are renters? If you're a renter, put rent in the chat. And if you're a homeowner, put homeowner in the chat. Because I'm just trying to see who's a first-time home buyer, who is actually a homeowner, but they're looking to move into a property. There's a stranger. It's going on third degree. Hadn't seen you in a while. Okay. If you purchase a home with current interest rate, how much are you saving per month compared to the interest rates months ago? It's a good question, Blair. It all depends on the loan amount. So if interest rates were 7%, 6.5%, 7%, let's say 7%, 7% a couple months ago on FHA, and your payment, and let's say you're a $300,000 house, and now you're getting quoted 6%, 6.25%. On $300,000, you're probably saving somewhere around $150, $200 a month. But that could be kind of distorted, and I'll tell you why. Because between a couple months ago and now, your homeowner's insurance could have went up. So that affects your payment. Or you could be in a new tax season where tax bills have increased and property taxes have increased on that home. So now that could have went up. But as a rule of thumb, you're probably looking at maybe $150, $200 on a $300,000 home. Could be the difference in what your monthly payment is based off principal and interest if you don't include the increased taxes and insurance. All right. No problem. Blair, I know I said it last time. I got to put it on my calendar. I want to give you a call so we can wrap a little bit. If you're actually interested in purchasing in the next 6 to 12 months, I would say schedule a call with me ASAP so we can kind of get a game plan tailored to your needs specifically. So when I give game plans, it's specific to the person I'm speaking with. If there's a husband and wife, each one of you will have could potentially have a different game plan to come together so you can purchase together. If it's a husband and a wife and one of you, your situation is not conducive to you moving in the time frame that you need, then we can put together a game plan for your spouse to be able to purchase on their own, right? If it's a group economics thing where I'm seeing mothers and fathers moving in with their kids and buying a larger home because it makes more sense, or that's where their home affordability is, then we can look at that as a game plan as well. Typically in any situation, you typically have one person that has less debt than the other. The other one has more income than the other. And sometimes it's better, one person has a better credit score than the other. Then you guys kind of offset yourselves. You kind of offset yourselves, or offset what you need. So where one person lacks, the other one's able to pick them up, and it doesn't necessarily always hurt the other person. Because I've seen some lower credit scores, but they had higher income. The scores are lower because some people still don't utilize their credit as much as they, as the others. So it all depends. All right, Rel. I saw that. I look forward to talking to you tomorrow for sure. The other thing is you want to make sure that you're continuing to save. That's huge. Continuing to save, even figuring out if you're willing to take on, what we would consider a starter home. The prices aren't starter home prices anymore, but, maybe not getting your dream home right away, but getting into a house, gaining ownership, living in that house 5 to 7 years, maybe 3 to 5 years, gaining some equity in that property, couple years from now, having increased income, more savings or having savings. Maybe you're done paying a car off. You're done with student loans, and then that puts you in a different buying power situation to where you could actually buy your the home that you're interested in buying, or your dream home. Yes, it's probably going to be more than what it would be now, but if you continue to wait until you get in that situation, you're going to run into the same thing years from now. The biggest difference is you'll have money to put down as for a down payment on that home, instead of trying to figure out or trying to save. So, buying a home that's not necessarily your dream home isn't the end of the world. But you definitely want to make sure you're prepared for the home ownership journey. So guys, listen, if you're watching the replay, definitely, chime in below if you're renting, if you're looking to buy in the next 6 to 12 months, if you're a current homeowner, let me know. If you are interested in joining our Facebook group, the links will be below. Our newsletter link will be below. My contact information will be below. You can contact me, reach out, and get a copy of my I'm sorry. You can reach out and get a consultation with me, where we can go over a game plan with you one-on-one. And in the game plan session, we're not necessarily pulling credit. Last week I had someone cancel an appointment because they said they didn't want their credit pulled. Well, I don't pull credit while we're on the phone. We have to make sure that it even makes sense to pull credit in terms of moving forward. If you say, hey, I want to buy a house, but I filed, Chapter 7 bankruptcy 3 weeks ago, then we're looking at a 2-year period of time, right? So it has to make sense in order for us to be able to, pull credit and put together a game plan. I have time for 3 more questions. If you have questions pertaining to home ownership, refinancing, or if you have something in terms of credit, you can ask away. If you have questions in terms of buying an investment property, let me know. But for sure, I enjoy these sessions with answering questions for you guys and seeing where you are in the process. I know some people who have come on here, over the last couple of years have become homeowners, and congratulations to them. We definitely want to congratulate Derek, who is closing on Wednesday on his new house. So congratulations on that. Much success. Hopefully this is one of many. And all you guys or gals who have joined the live and got your questions answered, or listening to others and learning. and other, who are learning from asking other people's questions. Sometimes there's people out there who haven't asked a question, but they join all the time, and it's not a bad thing. It's good to kind of listen to what other questions or concerns and comments other first time home buyers have. I would love to see you ask a question from time to time, but if not, at least you're joining and getting educated from your peers, and taking, some copious notes. Oh, speaking of notes, I have we have a first time home buyers journal. This journal will help you journal your journey through home ownership. This is a 90-page book that has information pertaining to budgets. It's got, notes that you can take for information sheets, everything from the beginning of the process when you're talking to your realtor or to your lender, to where you could potentially get referrals from people. And also, once you're under contract and you've identified your home, and let's say you've closed on your home, you became a homeowner, it has information in the back pertaining to the house, who the utility companies are, who the HOA is, the phone numbers, email, and addresses, so that when years down the line, or you forget something, you can reference back to this journal and pass this information on to additional family members. God forbid you get sick and something happens to you and you can't remember, certain things about the house. You have sections in here that you can take notes. Let's say you put in a new roof and you can't remember when. If you log it in your journal, that will help you. The link for the journal will be below. It's $19.99 currently. And let me know if you currently have this journal. I've gotten a lot of success stories where people said this has helped them in their process. Instead of having to write notes on the back of a notebook or on the back of a sheet of paper, they can just go back and forth to this journal and take a look at notes, so they don't have to remember everything. The link for this will be below, along with the Facebook group and the newsletter. Let me see. Miss Charles, Hess Charles. I'm assuming it's a miss. Being pre-approved, but still trying to find a home. Keep searching. It's a process. You may not find anything today. Tomorrow morning, you might wake up and you got 3 houses to choose from. So, just keep looking. If I had any wisdom to give to people, is just don't give up. It's the largest purchase that you've made and you're going to make, and it's going to potentially take time. For others, it happens right away. For some, depending on your needs and where you are in the country, it may take a while. What I would say is don't get discouraged and don't give up. Just continue to look. Maybe go back to the drawing board and see what some things that you can take, some things that are negotiable, some things that are non-negotiable, and just decide from there. But inventory, is starting to pick up in different parts of the country. Pricing has not gone down as much in a lot of parts, but I would say don't give up and continue to search. Where do state grants for home ownership fit in the home buying process? So typically when a lender is pre-approving you, they should have a good knowledge of what type of grants, down payment assistance programs are available to you. Most likely, there is no applying with the lender and then going applying with the down payment assistance program, because you're still going to have to go through the lender. Get with your lender, ask them if they participate in any down payment assistance programs or if they know of any to help you. I've been getting quite a few calls lately with NACA. With NACA, you go directly to NACA and apply. It's not anything you go through to like a lender like myself. So they can't actually help you. A lender, I couldn't help you with NACA because I don't work for NACA. It's a totally different process. But in terms of down payment assistance programs in your area, what you can qualify for, that's all a part of the pre-approval process. Because you're a first-time home buyer does not mean that you qualify for first-time home buyers grants or programs. You may not make enough money. You may make too much money. You may not be willing to live in the right area or buy in the area that the down payment assistance qualifies for. And then sometimes it's not even that. You may not even, like, if it's just you on the application, but you have other adults in a household who are going to live with you and they make an income, that could put you over income. So there's a lot of different factors, but the grants and down payment assistance programs are part of the pre-approval process. Not saying don't look for any, just saying, hey, talk to your lender and discuss what programs you're interested in, or that you're interested in down payment assistance programs. And if it makes sense for you, like, all of this is dependent upon you. Never let anybody push you into a program that you're not interested in. I will preface to say that doesn't mean that someone can introduce you to a program that you weren't aware of that makes more sense, but I would not let them pigeonhole me in a program that I don't want to do. But I would adhere to sound advice from my lender. Hey guys, it's been a long day. I appreciate you jumping on this live with me. I usually don't do them on Mondays. We had baseball last night and it got done real late, so I didn't jump on last night. But again, thank you for joining my live. If you have any questions pertaining to home ownership, the links will be below. A few minutes after this is over, you will see the links for my matter of fact, let me put my information in here right quick. Hold on. That's my email address. This is to buy the journal. And I'm going to add my Calendly link in here. Give me a second. The Calendly link will also be in the description. So you can book a call with me. Copy. Cool. Thank you guys. I appreciate you. Have a great night.